Off. I'm doing great. It's been a fun day of price action so far. Morning, good morning. All right. He's coming in. All right.
Right. Here we go. The room is so light today. What's going on? What happened? Frosty bastard, how are you? Good to see you. Robert, how are you? Jason, how are you? Adam, how are you? Oh, the market is just it's just a mess. Sean says the entire area, I'm getting hurt here. AA on a call. VIP yesterday down about 50%. Okay. Sean, remember, it's trading. They go up and down. And remember what I always say, if you get into a trade and it goes against you for a couple of days, get out. It's very interesting. Sean is down 50% while Vivek sold the AA for 13% on a day trade, up 13%. Amazing. Cam's workshop, that's what it was. Yeah, it's just the background, Michael. Remember I told you guys next couple of days are going to be really volatile earnings. We got to be really careful with positions we take. Don't go doing a lot of stuff. Yeah, and the light too. No, I'm actually not outside. I did say that a lot. Yes. I did say that a lot, Ken. I did. I did. People only hear the parts they want to hear. They never hear the part that says, "Hey, ATR is higher. You need to lower your exposure because the volatilities." Hey, I want to tell you guys something interesting, something you might or may not have thought of. Just a thought, okay? If if the market's moving 100 points, for example, whatever market, it doesn't matter. If the market's moving 100 points, say the Dow Jones is moving 100 points, it's going to do this 100 points. Your stocks are going to do this. If the market's moving 300 points, your stocks are going to do this. I know it's a really complex, I'm being really sarcastic, but I think you guys understand what I'm saying. Um, you need to always take into account what I say about the market, not just the trades. Like for example, let me give you a good example. I haven't taken any trades in the pit today, and I probably won't. Why? Because Amazon and excuse me, Amazon and AMD are going to have a huge impact on the tech sector. If it's a really big impact on the tech sector, then we're going to it's gonna move its way into the blue chips, good or bad. Hey, Roddy, haven't seen you in a while. Hope you're well. And Yellen, yeah, Yellen. Don't get me started with that Yellen. Oh, she discovered America today, that we have a deficit that's too big. Literally, she discovered America. Good, Richard. Good. I'm glad to hear that. So, sorry to hear that, Roddy. I hope you feel better. What's with everybody going to the hospital? You, Moondog. No, Terry, no, because implied volatility is really, really high right now. I'll tell you in a minute what I wanted to do yesterday. Frosty says you all don't get they put a sweet looking old lady to this. Oh, oh yeah, yeah. Hey, Kirk, how are you? Anyhow, Natasha, you need to tell somebody in customer service that. Vivek says from VIP yesterday, ACN. You getting all that, Matt?
Yeah.
Ben 25 and still in J&J, put with a 10% up, only 1% in SN. Hey, you can't have it all. More layoffs coming on Tesla, Cyrus. I didn't read about that, but I will later. Emergency room sat allergic reaction. Kathy, sorry to hear that. People getting allergic reactions. Uh, this is not good. Not good.
There.
Not good. We'll be starting in literally 1 minute. But let me show you what I wanted to give you. And I showed this to the morning crowd, but I know we get a lot of folks here who are not in the morning crowd. So I'll do it right. There we go. So what I wanted to do yesterday was I wanted to, this was an idea that I had. So sorry to hear that, Rochelle. Yeah, you too, Rochelle. Everybody's been going, Gaston, finally out of Johnson Johnson. Did you make money on the trade? Tell us if you made money on the trade. Good. Now, Cyrus, can you give us a little more information on what's going on with Tesla layoffs? I haven't read anything about that. It must have happened after the morning. Um, it must have happened after the morning broadcast because that would have been something I would have picked up on this morning. Anyways, let me show you what I wanted to do yesterday. And oh, that's me. I posted that by accident. I thought I was typing in a ticker symbol. So excuse me for doing that. So you see how Tesla was right around, actually, it was right at 198, 197. Believe it or not, and I know it doesn't help to say it now, we would have been, we would have already, right now, if we would have, anyway, let me show you what I wanted to do. So I wanted to go ahead and I wanted to buy the Tesla. I wanted to buy the Tesla 10 days out. I wanted to buy the 205 call, okay? And I think it was going for about $4. Somewhere in the ballpark, $4. And then I'm in contact with my affiliate, major layoffs and not just positions on top and folks on the admin side. Oh, wow, Anastasia. Not good. Not good. Good. Adam took the S silver put and EWJ based on your seasonality, Matt. Look at that.
Nice.
So, and then what I wanted to do was I wanted to do the where was it? The 192.50. Where was it? Somewhere around here. Somewhere around the 182.50s. And the theory, it was going to be about $10. And the theory behind it was that Tesla was either going to move to the upper end of this channel, which is at the 200 level, or move down to the 170 level over the next week or two. That was the idea. The problem was the spread was a little too expensive. I figured $10, $11 is a little too much. I try not to give you guys trades over straddles over or strangles over $10. But I wanted you to understand what I was looking at. And the reason I wanted to do that was because Tesla was right in between this range and this range. Okay. So again, my suggestion is only I want you to, I think if you see 50 times when I put these straddles and strangles on, you will start developing a really good feel for it. Hey, good, David. How do you choose between a straddle and a strangle? Thomas, that's a great question. If I'm looking for a real massive move and massive move, then a straddle would be good because then you're using the same strikes. But if I have a little more idea of where price is going, a little better sense like here versus just it's gonna move, man. Then you could do a strangle is better because it could fine tune your position. Right, that's the whole point. Exactly. And here's how you do it. There's two ways of dealing with it. Once you're in profit, so you do a strangle or a straddle, you wait for one side to pretty much double, which offsets the cost of the other side completely. You offset that position and then you have a free trade. Or conversely, you just close out the entire position. But that's usually how a professional trader would trade a straddle or a strangle. Same old sees a good trade action. Let's play the probabilities. There are so many of them. Exactly. All right. So that's kind of what I wanted to show you. Yeah, that workday sure looks good. I'm gonna actually add it again. It was on my morning watch list, but I'm gonna add it again to my watch list. So where are we? What's happening? Where do we go from here? We are now. Remember yesterday I told you all. That's all right, Jeffrey. Thank you for being here. I told you guys yesterday that we're going to either bounce off. We're going to kiss the 50-day moving average. We're going to bounce hard past it. Not bounce, slice it and dice it and move up here and really have a chance at breaking highs. Um, good, Kim. Or I said we're going to kiss the 50-day moving average and we're going to come right back down here to this support area, right, which would probably put us right here because the highs are getting higher, which is good. We're more likely than not going to have a good idea of of what's going to happen till the FOMC. I think we can have a really good reaction from Amazon and a really bad reaction from AMD or vice versa, or we can have both good reactions. But I think the market will be somewhat muted. I think the market will be somewhat muted till we get out of this chop because right now we're in twilight zone, and twilight zone means we're not really our stocks are going to be doing this. Our stocks are not going to be it. We gain a lot, we lose a lot. We gain a lot, we lose a lot. There's a note for you from Brendan, Matt. So my point here is we have to be mindful. Now, here's another scenario. Tomorrow morning we'll have good news today or bad news. If we have bad news and we fall down here, it's going to be really hard to recover even after the FOMC, and we're going to have to wait for us to go down here bottom, and then the FOMC will probably raise us back up. I don't think Powell's going to say anything that crazy. And I think the market right here digested some dovishness. But remember what I said. We're either going to get to the 50-day moving average, we're going to kiss this level, and we're going to bounce right back down, or we're going to break through. We don't know which way we're going to go or no. And I'm promising you, no fund manager does either. That's why volume is a little muted. Trading range is wide, but it's not really directional. It's very, very choppy. I mean, look at this. Up, down, up, down. There's not a lot of rhyme or reason to this. Frosty, we'll see you later.
Hey, Frosty.
Hope everything goes well. So let's just kind of wade this out. We don't have a lot of time. We only have till tomorrow, 2:30. Before the end of tomorrow, we'll know which way we're hanging. Don't think you can predict the future. Don't. Now, again, if you're in a stock and the stock is in a major downtrend, and it's been in a downtrend for 3 months, I don't think tomorrow's report is going to impact it. It may rough it for, tough it for a few days, but that's about it. It usually takes 2 to 3 days to revert, even after earnings. And I don't think we're going to see anything too market moving. I don't think he's going to open up America, as I say, for us. He's not going to do that. He's not going to tell us anything we don't already know. We kind of understand the kid ain't getting that bike anytime soon. Ken says if Powell hints at as gentle hand, the market will take it as a promise and take off. Exactly. So unless he says something really bad, it will probably move to the upside. That's one of the reasons why I don't want to make too much out of this right now. Remember, news always supersedes regular technicals, and I don't want to make guesses, and I don't have to right now because I think we're going to either go above or we're going to trickle down. There's really not many. I don't think we're just going to sit around here. I don't think that's in the cards. So we'll have a much clearer understanding. But for now, we don't want to guess which way things are going to go. We don't want to make big plans for ourselves right now because we really don't know. I don't know, Gaston. I don't know right now. I don't know right now. I think a lot of it has to do with the report tomorrow. Which, for example, why am I flat in the pit right now? Because I don't know what's going to happen tomorrow. And if I do put on a position, the position will have to be validated or leaned into with a really, really good long-term trend. Like, for example, Johnson Johnson, which you mentioned. That's a good long-term trend. I don't think this report is gonna have a monstrous impact on Johnson Johnson. Um, DRH says, does the fact today is end of month play into the market movement? No, no. If it was end of the quarter, yeah, but not end of the month. No. And it's not an end of the month on a Friday. Well, Cyrus, that's what I've been saying for the last 10 minutes. I think the market's going to move. I just don't know which way. I also, historically, remember, I think Amazon and AMD will have good earnings and they have a lot to work with because they can keep AI. They can talk AI till the cows come home. Good, David. Good. They can keep doing this till the cow come home, right? I mean, they got that AI. Look. If Elon Musk can say he's going to have a car out in 4 years at a lower price and have a rally of 15 points, then they could talk AI. Do you all agree with me? AI. Yeah, right? Right? Okay. All right. Hey, work with me here. All right? Work with me here. So I'm just being realistic. So people are they're gonna unless so my point is unless the earnings are really really bad, the stocks are gonna go up. FOMC, I don't think Powell's gonna screw the pooch just yet. I think he's gonna try to let the kid down gently by saying uh there's still plenty of time this year, and the truth is there is. Remember, even who you know me, I don't BS you guys. I say it how it. You don't have to wonder with me what I'm thinking, right? I should hope so by now. You know, I'm going to tell you exactly what I'm thinking because no matter what I think, it's not going to influence the market. That's what I love about the market. Everybody has an opinion. And I don't always trade my opinion, but I am entitled to an opinion. I'm an American, you know? Everybody's entitled to their 5 cents. Good, Raw. Good, good. Grab that too, Matt. Why don't you?
Yep.
Like Foot Locker. See, the Foot Locker, like what is Powell going to do that's going to impact Foot Locker? So if you're in a stock like that, I don't think anything major is going to happen. But I think you get my point. Are all gas and oil? Yes, Jeffrey. Except, yeah, I think all of them are down today. All of them are down today. So the point is, let's hope for the best upside, but let's prepare for the worst. But the worst is notice these highs are starting to get higher, and I think the moving average is moving higher, and this isn't moving lower. So I think even if it craps out, I don't think we'll go too much below 498. And I'm pretty optimistic that we will go above there's a lot of stops here. And I'm going to tell you something. If this thing starts gearing up higher, a little bit higher than this area right here, oh, you're going to see a big squeeze. Not good for CVS. Not good for CVS. I've read about that, Adam. Not good for CVS. I was talking about that with somebody while I was in Tampa, Treasure Island. Actually, we were having conversations about that. I think my in-laws. They're always interesting to talk about. They're retired oil workers. Okay, so hopefully higher. We don't know for sure. I don't have any positions in the pit right now. And if I would put positions on, they would be positions that are completely doing their own thing. They're not really dependent on the market. Otherwise, we could be in some pain. And I don't want it. I don't want to be in that position. Also, the market looks like it's trying to create a bottom right now. We still have plenty of times in the day. If we can get above the VWAP, we can get some buy stops. Remember, we have a lot of volatility and we're not necessarily going too many places. Before I move on to my stocks, there's something I want to bring up. I haven't done this in a while. Dom says pit trades plus not market correlated. Yes, that's right, Dom. That's right. And sometimes I'll do that. If I don't see a good trade in the pit, I'll do that. For example, Pfizer was one of those trades. Pfizer was not really a strong momentum trade. Go Goldman Sachs was, um, Dollar General had high volume. Pfizer was just a trend trade. And I might have mentioned it. I said I like this because it's been doing what I wanted to do for a long time. No, Chris, too much volatility, too much. I like the uncertainty factor, just too much volatility. If there is, I'll give you one. I'll always give you one. What I want to do is I want to give you enough of those straddles, strangles, see if you guys like them, and launch a service where we do a couple every month and or just put them in the pit, one or the other, something like that. But I want you guys to make money with them first, like a good amount of money over time, and trust them and get used to them. So I only want to give them to you during the best opportunities possible. You like them, Stephen? Yeah, a lot more folks like them than I would have thought, but people like them. So before I move on into showing you what stocks I like and hate, Gaston says put them in the pit. Well, that's where I test things in the pit. I've been putting them in the pit, Gaston. Last time I checked, I think I've given you 3 already. But let's continue. So you guys may want to write this down. You guys may want to write this down. Okay? So this is from 2 days ago, but please write some of this down. I'll quiz you on it. Using estimates for Amazon, Apple, and Nvidia because they haven't reported yet, so I'm just using estimates, okay? And they're releasing tonight, May 2nd and May 22nd. NVIDIA doesn't report all the way till the end of May. Actual results for the other 4 members of the group have already been out, so we can actually compile them. Please listen. Total earnings for the group are expected to be up 43.7% for the same year on 13.2% higher revenue. So when it's all said and done, Michael, when it's all said and done on May 22nd. So what I did was I used what came out, okay, and I used what was expected. So I'm trying to be as fair as possible. I'm taking in what's baked into the price and I'm taking what's already out. So I'm not giving you my 5 cents. I'm only giving you the up 43.7% on 13.2 higher revenue. This is interesting. This is why I wanted to share this with you. Please note that the Mag 7, as they like to call them, currently accounts for 29% of the S&P 500 capitalization. Yeah, that's right, Natasha. Can you imagine that? 29.1%. That's too much. See, that's too much. Really, that's too much. And they're expected to bring in over 20% of the total earnings for 2024. 20%, 1/5. 1/5. Matt, can you imagine that?
That's crazy.
Talk about the haves and have-nots, right?
It's dangerous.
And then they talk about, and then in America they talk about how there's non-compete. Think about 20%. What percentage of America works for these 7 companies? I'd love to know that number, right? Anyways, I digress. But then you can argue that a lot of mom and pop businesses that are not America's made out of a lot of small business. It's just interesting to digest this because those numbers, it's just an interest for me. I like numbers. We remain literally in the heart of the first quarter. We've got about 900 companies still to come from the market, so there's a lot of things that can happen. It is mind bending, but we only have 177 S&P members left. So we do have a really good percentage of the S&P 500. It'll be a lot cleaner and clearer once the FANG is out of the way for obvious reasons because because of what I just said, for all those reasons. But now here we get to the broad part, and here's the part you guys want to write down. Well, I think you've already wrote down the other part. But can you imagine the number 43.7% expectation on 13.2% higher revenue? But listen to this. Through last Friday, this does not include this week, okay? We've seen the results for, so this is me going, I'm going back. Please don't correct me. I know we have more today. This doesn't include today, okay? We've had about 250, about half, about 50% of the index. It's a little more, it's a little less. Don't go, just let it be, okay? Total earnings so far are up 2.8% from the same period as last year on 3.3% higher revenue. So we're at 2.8% higher, which is not much on 3.3% higher revenue. With that said, 78% out of half of the S&P that has reported, which is a significant amount. We're not talking 10 companies. 78% have beaten estimates and 60% have beaten revenue. Okay. Yeah, yeah, yeah. I just find this interesting. Now, here we get to the big picture. Now, this you may want to write down because, as you know, this is a moving target, and I wanted us to wait till we at least wait till we have something to work with. I didn't want to talk about this when we have 10 companies reporting, right? So, looking at the first quarter as a whole, earnings are expected to be up 3.8% from the same period from last year. And so far, we're at 2.8, Ken, and we're expected to be up 3.8. So they're expected to move up from where we're at now, not down, which means the market could potentially have some upside. How much does forward guidance have on the price movement? I'll talk. Thomas, great question. I'll talk about that in a minute with an example. There's actually a perfect example of that, maybe even two. Thomas opened up a can of worms right there. So, which would follow a 6.8% earnings growth in the preceding period. So, folks, we had a 6.8% earnings growth last quarter, and now we're talking about 3.8 versus 2.8. It's not good. Yeah, John, it is 70 to 80% of it. So, looking at the overall picture, we're looking at earnings to be up 8.3% on 1.7% revenue. The two numbers you may want to write down are 3.8% on 3.7% higher revenue. So 3.8% EPS on 3 points. That's what for this quarter. And the total for the year, they're looking at 8.3 EPS on 1.7 revenue growth. You may want to, yes, they are, Ken. And here's the bad part. Next quarter is when you may or may not remember this, but next quarter was supposed to be the first quarter that earnings estimates are not going to go down, are supposed to go up. Do you guys remember that? It was supposed to happen it was supposed to happen right before summer. We talked about it maybe in October, right around my birthday last year. Remember I said not the next quarter, but the quarter following the first quarter of 2024. You guys probably don't. I say so many things. You guys probably don't even remember that. But I did say it. I said, do you remember, Matt? Chris remembers. Yeah.
I
So
do. I do remember you
yeah, I
saying that.
said not this quarter, but the next quarter, EPS is actually supposed to go higher, and uh, so in very very quickly, just to summarize this, I know there's a lot. I talked about it, and I have a sheet. You guys don't have a sheet. Uh, what's baked into the Mag 7 is 43.7% on 13.2% higher revenue. They account for 29% of the S&P, which isn't all that important. But for the quarter as a whole, we're looking at 3.8% EPS on 3.7% revenue. And for the year, we're looking at 8.3% EPS on 1.7% revenue. Now, Roger, why do I need to write this down? I'll tell you why. Because we have to have this is like comparing price to value. If you're a market profile guy, we have to have a baseline. This gives us a baseline of what's baked into this market. Ben says this overall deceleration of growth or performance versus expectation tell us more. Yeah, it does on a fundamental level that inflation is really biting into things and things really need to change. But it also, and see, here's the thing. If we start having more unemployment and more weakness, that's when the government's like, hey, we need to raise rates. But we haven't seen it yet. So there's going to be a balance between when should we take the crutch out or where we shouldn't. Do you remember what the Fed did with with interest rates before. They waited too long to start raising them. Well, now they're going to start lowering them too soon. Why? Because that's what they do. Now, let me answer. Ken says, does that mean the FANG is holding up market, which would otherwise be dropping? We don't know yet, Ken, because we haven't really. So far, it's. No, I wouldn't say so. Not yet, but it could be moving in that direction. But somebody asked me a good question, Thomas. How much does forward guidance have on the price movement? Well, Thomas, let me answer your question with a very specific example from last week. Last week, Meta said that they gained 10% EPS, but their forward was crap. The stock dropped 10%. Meta lost 10%, but said they're coming out with a cheap car in 5 years that nobody even named yet or has been born. And what happened to their stock? It went up 10%. So one stock gained 10% but lost 10%, and one stock lost 10% but gained 10%. Did I answer your question of how important forward-looking guidance is? It's everything, man. That's the whole. Amazon's first 10 years in business was based on forward-looking guidance. You know what I call forward-looking guidance? The big carrot that you dangle like this. Just keep dangling that carrot. Sorry, it was a good question. Cyrus says the tech, Dan, not just lowering too soon, but lowering too fast. Yes, yes. It depends. Yeah, we don't want to lower them. Yes, yes, Ken. That's exactly what happened. Yeah, yeah. And he did other stuff too, but the market, analysts, and the companies, Michael, analysts, the analysts go to the companies, they get the interviews, and then they set the guidances. And usually they're pretty in line. And that gets baked into the price of the stock because Morgan Stanley and Goldman Sachs, we just broke the low on the spot. Goldman Sachs, Morgan Stanley, and all the Prudential, if you do a lot of metals and golds and things like that, they're constantly adjusting and they're constantly coming out with the reports. We're cutting buy, we're going to hold, and that's all gets priced in or baked into the price of the stock. Excuse me. It's all based on sentiment. So when the company comes out with a forward with sentiment, remember that's not priced in yet. So the market has to react to it. I think you guys all get it. Let me talk stocks. Let's talk stocks. Let's do the short side first, okay? So I wanted to actually give you this stock today in the VIP room, in the pit, but I didn't because the spreads I thought were a little too spready. So I figured I'll just give it to you guys here. But this one was very close, but I didn't do it. So we're going right here, 307.50 puts right here. 17 days till expiration, May 17th. Thank you, Ken. 307.50 puts right here. With a stop around right here, 320. Do you see that, Matt? Do you know if anything's, does anybody know? I'm with you, obviously. I don't know what's going on, but do you know what's causing the slide? This is not a regular candle. That's a candle that means business. That's real selling pressure. Now look what happened here when we saw that. Boom, and then back up. So again, with earnings, it's hard to say, but this is very meaningful. This is not something you take lightly. This is BS right here. This is real. How do you identify institutions from random? This is random. This is institution. This is institution. This is institution. This is definitely institutional selling. Sorry, just wanted to show you things while I had you here. Oops. See how, look at see, this is what I was afraid of. Remember I said it's going to kiss this and then it's going to either come up or come down. Right now it's already below the low and it's already traversing down. Good, Phil. Good. No, consumer confidence came out early already, a long time ago. Okay, let's just continue. So I do like it, but again, I didn't want to do it because the spreads are wide. I didn't want to get 5 emails. Roger, you're giving us spreads that are too wide. Let's move on. Cisco. Yes, Cisco. Cisco's finally on my radar. Look at that. It's got plenty of downside potential. I would put my stop loss right here, about 48, maybe even 49. I would go about 17 days out. We're not in May yet. Tomorrow we're in May. Sell in May and go away. Remember that, Matt?
Hmm.
Right here, 68 delta or 77 delta. 48.50 right here. 17 days till expiration. I like Cisco. Okay, let's continue. This one looks like a beauty. Now, look at this stock. What has this stock been doing for I don't even know how long now? No rallies. Just goes straight down. Or even when it's not, it goes up for a couple of days and then it just comes right straight down. This stock is not going to be impacted very much by the Fed. Yeah. And by the way, Johnson Johnson's breaking below. Just FYI. Remember what I always say. Never, ever, ever make a day trade unless your day trade would be a fantastic swing trade. The stop loss here would be around 107, 83 delta, 110 put. It's the story of my life, Gaston. Story of my life. Real estate REIT. I think there's more downside here. Also, look how long this has been bearish. It's pretty bearish. I don't think earnings on Amazon or AMD are going to have a big impact on the stock over a few days. $32. 86 delta, 32 put, May 17th expiration. You know what? Let me check on Dollar Tree. I haven't looked at it yet today. Yeah. What is it doing? It's going down. So this was a day trade, but let's say you missed it, for example. It's perfectly beautiful swing trade. We've already covered this a few days ago, so I'll just move on. X-ray. I would wait for X-ray to break down a little more. Oh, this is a wrong stock. Sorry about that. I was like, this now we got it. That's the right stock. That's X-ray. Breaking down. Is it particularly bearish today? Not really. I mean, it's just doing its thing. Put a stop right above this bar, 31.15. Spreads are too wide. You're going to have to do the underlying here. Same thing with Match, right? We've talked about I gave you the stock here, I gave you the stock here, I gave you the stock here. And yeah, look, it sometimes will go against you a few days, but then what happens? Why? Because look at the highs. The highs are getting lower. The highs are getting lower. It's in a downtrend. Let the trend save your butt, not a stop loss. Let it revert back to the direction of the trend. Right, Matt?
Right.
That's right. About 33 for a stop. About 17 days out. And it doesn't have to, Cyrus. What kind of news do you think Match will come out with? The company's what, 30 years old, 25 years old? I don't think online dating is that new anymore. I think like now, I think like 2/3 of people meet online, whereas 20, 30 years ago it was like, what? You met online? How could you? Right here, 73, 32.50. It's a nice option right here. It's got time left. Oh, Dollar Tree is on my list. Excuse me. I thought it wasn't, but it is. Never got a date in Tinder. Well, Gaston, the night is still young. 124. Right here, 121. And Workday. This one I'm definitely bearish on again. Notice every one of these stocks. What do they all have in common? They've all been bearish for quite some time. They're not just becoming bearish. We're not trying to pick something like this where it's just, hey, let's sell it when it's still expensive. No, don't. No, wait for it to really dump. Why? I'll tell you why. Let's say, hypothetically speaking, that I'm a hedge fund manager. And let's say, hypothetically speaking, I look at this stock. You know what I'm going to say? I'm not going to buy this stock with anybody's money. I'm going to get fired if I buy this stock. I'm going to, as a matter of fact, I'm going to liquidate the remaining shares I have before it goes lower. That's what you want. You want stocks that look that way. Because if they look that way to me, if they look that way to you, they will look that way to a professional trader. Um, the stop here would be at 259. We would look at 17 days out to the 76 delta right here, 250 put. And that's our short list for today. Now let's go through our long list. Okay. Kathy Woods is in a whole different world. Good, David. David, how did you know that I wasn't going to give you one for tomorrow? Maybe I will. Maybe I'll give you guys a bonus. We'll see. We'll see how it goes. What's tomorrow? Tomorrow's Wednesday, right? Which means we have
Tomorrow's Wednesday.
tomorrow's Wednesday, right? Right. No, CVS didn't make my list today. That was it. That was on my list. But I'll take a quick look. No, no, it's been the last 3 days have been bullish on this stock. I want to see it break down. I want to see a day like this, which most likely, you know what will happen, Adam? It'll just come right back down next couple of days. But I don't want to guess. I'd rather get a shitty price, but I want price discovery to get there first. It's just the way I'm taught. I'm not looking to get ahead of it. I'm not looking to get ahead of anything. You know, I don't want to sit there and say the wave is coming. The wave is coming. It's going to come. I want that wave to be in front of my face. Again, it's a personal thing. Nothing wrong with this trend. I mean, it's a great downtrend. Just today I'm not 2 days ago maybe. Right here maybe. But 3 days, I don't know. I don't know. Maybe. Doesn't look bad. I could find a lot worse stocks than that. I like this. I like that rounding area right here. Matt, I don't know about Matt. We'll get Matt's opinion in a few minutes when I'm done talking. You know how he is, Chris. He loves to give his opinion. You can barely get him to shut his trap, right?
Right.
My LUV love went from 20% up to 20% down and is breaking down. Why would this happen? Volatility, Richie. Volatility. Look at the volatility. The market's going apeshit right now. Bad. This is why I'm not putting on any positions before the earnings on Amazon, AMD, and before FOMC, unless it's something really, wild. Okay, let me see something here. Okay. Oh, they had bad news relating to Boeing. Okay. So our stop loss would be somewhere right around here at about 63. Could be, Cyrus, could be a big bear trap. We don't know. Earnings coming up. We're going to go to calls now. We're going to go to right here, 95 Delta, 6250 call. Right here. BMA Bank. Financial sector, the Latin bank. Look how good it's doing. How much correlation does this have to US markets? Not as much as you would think. Yeah, Robert, below 505. Told you to be careful of that area. The 510 and the 5 and we look what happened when we went to the 50-day moving average. We kissed it and bounced off. That's funny, Bodine. And a funny show, too. All right, so you see right here would be my stop, right under the pivot. Whittle 17 days out to the 78 delta. Spreads are spready, but if you want it, you could still get it. 50 call. Dove, industrial stock. A little too far from the 8-day EMA, so I would skip on this one. Ever. That one looks good. It's an internet technology stock. Stop loss would be right here, about $18. 17 days out, 90 delta, too spready. No love for us here. No love at all. Good, Vivek. Go ahead and grab that, Matt. Next is Vist. This is a utility stock. Stop right here at 42. 17 days to go. 96 delta. 40 call right here. Gave you this stock a few days ago in the morning show. It's been doing really well, and it's still near the 8-day EMA. There could still be some potential upside here. I would put my stop right here at the 153 level. Right there. Go about 17 days out till about either the 155 or the 160, preferably the 155. VRT, I prefer to wait for it to pull back to the 8-day EMA with the market doing what it's doing right now. So let's hold off on wait on that one. Matt, your favorite garbage stock?
Oh yeah, I do
Not
like
bad, huh?
Republic. Yeah.
Doesn't look too bad at all.
No.
No. Put it on your list. It's almost right at the 8-day EMA. 189. 189. Do you remember what I said in the morning live stream? If VIX goes above 1550, Krish? Good for you. Good for you, Adam. Good. 190 call right here. Anybody want any chicken wings? Still too far above the 8-day EMA. I want to see it closer to the 8-day EMA. No soup for this one, or no chicken wings for this one. This one's okay. I like how it did this. I like the it's a REIT, healthcare REIT. Stop loss would be right here under the 20, about 20, high 23s. Too spready. Nothing good for us. Let me take a look at one more potential short. Yeah. Hmm. Cyrus, I think it's just the whole market. I'll give you another short today. SLB stop loss at 50. Hmm? 17 days out, right here, 49 put. They can go down another $2. All right, Matt, take us through seasonality, my friend. RSG, yeah, I can give you a stop on RSG. I did before, right around 189, maybe 180, yeah, about 189. No problem. Depends on how much volatility and choppiness I'm seeing in the market. And also we're around earnings right now. So you want to give yourself a little more time, David. Oh, yes, Bodine and Amazon. All right, Matt, you ready?
I'm ready.
Do it.
All right. Here is the long side for your sectors. Healthcare remains strong, and base materials coming up. Good accuracy, decent profit factor. Industrials also moving with it. Tech looks okay. Financials look okay. Consumer staples really fell off today, which was interesting. That was the strongest yesterday. The short, it's not super great. Just in general, really the only short side is utilities. So seeing choppiness there. So, well, hold on. Let me make sure I'm not confusing myself. Nope, not choppiness, just short. And on 10-day hold, industrials are picking up steam, basic materials as well. That is about it. I mean, we're really bearish still seasonally. Really bearish.
Huh.
That 10-day hold's really weak, except for healthcare. Even this has good accuracy, but no profit factor, which is not good.
YouTube, Chris.
Yep, it's on YouTube. I can grab the link in 1 second. Let's grab the number of long stocks. $228 again means nothing. Less than half, a little bit less than half. Really not much to do with that. And the top is all jumbled, so we ignore it. Kind of the same thing on the short side. It's also a short list. 80. Yeah. Not much there either. Looked a lot clearer yesterday. And 10-day hold looks, again, super weak. Even going down to 60% on 10-day hold, you're only getting 128 stocks. Yeah, just really doesn't look that good. So short side action is in for sure.
Nothing is looking good for earnings right now, Richie. But nobody knows. It's impossible to tell. It really is. I've tried it. Look, I've tried it. I've done over 1,000 coin flips. I Anybody who tells you they can guess earnings, it's impossible. I've seen stocks go up 15 points and then go down 100 points on earnings. I've seen it all. I've never seen a measurable way to do it. Now, maybe on stocks like second tier stocks because they're harder to manipulate, like DocuSign, Roku, like the 300 stocks we added to our data miner. Stocks that are not in the S&P, but at the same time are hot stocks at the time. They're a little easier to work with because you can kind of track their volume a little easier and you can't hide shares. But like on a stock like Microsoft, Tesla, Netflix, you can't. You just can't. You can't. If there was a way to do it, I promise you, I'd be the first guy to be doing it. Anyways, is that it for you, Matt?
That's it. Not a
Folks,
lot.
take it easy right now. Don't go making uh don't go making large bets, assumptions, conclusions. You really don't know what the market is going to do. Typically, this type of volatility would seem like a lot, but remember, we're in the busiest 2 weeks of earnings. Now, last week and this week are the busiest weeks. There you go, Gaston. So please, 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 just take a breath, take it easy. We don't know what's going to happen. We can have really good earnings, for hypothetically, and we can have a a dovish Fed come out on Friday, tomorrow, excuse me, and we can have a good report, job report on Friday too. So there's a lot of things we got going on. Richie says I'm still holding all my trades. Yeah. So my point is, we really don't know. We really don't know. And the ones that think they know, ay 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 ay. That's the word. You really don't. The more you could say that, I'm going to tell you something, guys. There's nothing wrong with saying this is a highly unpredictable random market, and I don't know what the F is going on. You know why? That's okay, because 80% of the time, that's how I feel. And I act the 20% of the time that I don't. Okay. So it's perfectly normal to be in that mode. All right. Venkat, I agree that there's not going to be any rate cuts or maybe one around election, but I don't think they're going to say that. Good, Thomas. Matt, why don't you get that? But 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 you see, you understand Venkat. He's not going to say that. He's going to say something like, uh, the evidence of the economic data rolling into our database has shown that the propensity for lowering rates has decreased slightly. However, with that said, we firmly believe that we're still going to be on track to make a dent on interest rates, and we could potentially lower rates more than once or even twice this year. How did I do? You get the point I'm making, right? He can spin it just like that. I didn't even notice. I didn't even like. I didn't practice. I just basically said a bunch of nothing. Exactly, Dale. That's exactly right. Exactly. That's exactly my point. I think he's going to. I hate politics. I hate politics, man. I hate politics. I despise politics. Like, if you want to boil my blood pressure, get me into. I don't get involved. Even with T-Buzz, I stay away. He's talking tomorrow. Not T-Buzz. I'm talking about Howell. He's talking tomorrow at 2:30. Yeah. So folks, we just don't know. We don't know. And I'm going to tell you, the more you can embrace the I don't know, the better you will see the market, the cleaner you will see the market. Me too, John. I do too. I do too. All right. You folks have a fantastic day. I'm tired of the Fed too. Let's just keep things flexible. Let's see how things work out. I think in the best case scenario, we're gonna here. Let me just well, I don't want to share my screen again. I think in the best case scenario, we're gonna go above the 50-day moving average. I think in the worst case scenario, we're gonna go to the bottom of the range near the 100-day. I don't think earnings are going to be that bad. I think if anything, I here's the last part. I don't think it'll be earnings that sends us down too much. I think that earnings will start something, and Powell will either turn it around or accentuate it. Okay, that's how we should look at tomorrow. Okay, I might have an opinion, but I don't have an edge, so be cautious. Exactly, exactly. There's nothing. You could play cards for hours and say, "Hey, I don't have an edge here," and then strike when you do. And when we do, we'll strike when the iron's hot. Uh, the key is pick stocks on the right side of the trend. You too, BB. I'll see you guys later. Have a nice day, everyone. Bye.
Bye, everyone.